Hi, and welcome to the Common Fund Point of View podcast. My name's Anita Harriton. I'm head of client engagement for Common Fund OCIO, and I'm joined today by my colleague Chris Kuwait, who's Common Fund's chief investment strategist. In this podcast, we look to give you our latest views in 15 minutes or less. So, Chris, let's get started. From a macro perspective, what does our dashboard currently show? And maybe, kind of along those same lines as well, what's changed since last quarter, given that there's been a lot of shifts in the market?
Yeah, so really not many changes in the factors we follow. We had two last quarter. Most importantly, we upgraded a significant factor, and that's I'm looking at the dashboard now. It's monetary policy. We moved that positioning to neutral, right? As we do expect the Fed to cut this year and loosen monetary conditions by slowing down quantitative tightening. Um, and we see Fed funds relative to headline CPI in neutral territory right now. And one of our factors we downgraded is sentiment, and we think that really reflects a lot of this, uncertainty around fiscal policy. Um, and there's also a good amount of uncertainty that we're seeing around employment, right? Where if we think about the major drivers of employment have been government and healthcare, and the worst sectors of employment have really been manufacturing and IT. Um, and right now, we're seeing some underlying weakness in the job market. If you look at job cuts, if you look at job openings, if you look at hours worked, if you look at temp work, um, and we want to be sensitive that going forward, we do think there is some pressure on federal, state, and local, governments to reduce payrolls, and that's been a big part of the growth in employment. Um, so we're not really projecting large changes at this point. I, I think the hard data that we found is still pretty strong, um, but sentiment is weaker. And we do think things will slow a little, and earnings estimates are coming down a little bit, but we still expect earnings to be higher than last year. And it's also somewhat encouraging to see participation, in many sectors of the market and from an earnings perspective and earnings breadth this year.
Thanks. We've actually seen in the U.S. stock market in particular, a significant pullback. What do we see going forward for stocks in particular?
Yeah, well, this was a rapid decline in the equity markets. I think it was the sixth fastest 10% decline we've ever had. And when we have declines, there's always, after the fact, so there's lots of factors at play. But I think that this is really mostly headline volatility driving the markets. But the fundamentals still remain largely intact. And when we looked at analysis where, you look at drops like this, and usually when you have drops in the equity market, they don't extend into the 20% plus type drops, right? Unless we're having a recession. And so typically the market comes back, it's just a usual dip. Um, but one thing that I think is interesting is we're seeing that there's not really a lot of conviction in the markets. And and as an example, we don't see our hedge funds and global macro managers having very hard views or using significant amounts of capital. When we look at capital usage from and we focus on speculators, it's low in terms of leverage, net exposures. And I think that's because we don't really know much yet. So in terms of policy, so Common Fund, we're keeping our clients very well diversified. Um, and the other thing we're focused on is maintaining plenty of liquidity in our portfolios.
That's really helpful. So, what does Common Fund think about all the constantly changing news on tariffs? There was another new tariff announcement yesterday on, imported automobile parts. And how does that potentially impact trade wars?
Yeah, it's tough. First off, I think um, what's tough is the policy sequencing with the government is different versus the last time Trump was president. So at the onset of this term, the government is sort of dealing with the worst and hardest policies this time, right? Our balance sheet and tariffs, I think, are two strong examples. And last time we started with significant tax cuts, right? Now there's this focus on reducing the trade deficit. So, you know, we don't see this as a trade war in a traditional sense. It's more of a negotiation, and it's a negotiation to level the playing field and find more equilibrium in global manufacturing. Um, but being clear, we do believe there will be tariffs, and from our standpoint as a firm, we don't really view tariffs as inflationary. Maybe short term. Um, you mentioned, cars as an example, 25% non-US or something like that. But ultimately, tariffs reduce, efficiency of the economy, and they have a negative impact on families and businesses.
You mentioned that we don't really view tariffs as inflationary, but let's shift that a little bit to what the likelihood then of a recession might be. Do we think that's increased or decreased as a result of some of these more recent policy initiatives?
Yeah, that's a good question. I think the likelihood of a recession has increased for sure. Um, but we still don't have clear information and we don't know the rules yet. We'll know more hopefully on April 2nd. But certainly, if you look at predictions from banks, right, the probability of recession has gone up significantly. And if you look at the betting markets, it's gone up significantly. Um, but at Comfo, we're really thinking about, and we want to be sensitive to the fact that after tariffs are negotiated, um, we could see more pro-growth policies, right? Such as uh, hopefully tax cuts, right, and hopefully deregulation, um, in areas like energy and financials. Um, but we don't think we'll have a full-blown recession. We think this is, more of a slowdown, and we must avoid a recession as a country to shore up, our balance sheet. And our leaders, I think, are very aware of this.
So it looks like the Fed's stance from here is to cut rates as they follow the data and some of the points that you've mentioned. Is there a Fed Trump put?
I would not assume we have a Trump put, um, um, uh, but I think we do have a Fed put in place now, right? The Fed's signaling they're cutting rates twice this year. We think could be more. Um, and they're significantly slowing quantitative tightening. And the Fed was, I think, really clear, and they acknowledged that um, long-term inflation expectations are anchored, and they also are looking through tariffs as far as their influence on inflation. And but much like rest of the investment universe, they have to watch data. Um, in some cases, in many cases, it's lag data. They're aware of this, but I think they will remain uh, data dependent, try to focus on things that give them forward insights. And I think they're going to also have to have a real eye on, policy decision making. Um, but the Fed's going to be, we think the Fed will help liquidity in the markets. right, later in the year, and that's important.
So how and to what extent do you think that will impact fiscal policy?
Well, in terms of initiatives, I I think President Trump is clearly, um, you know, cutting spending and trying to address our debt situation, and we do think there will be tariffs, um, but there are ways he could bring about a Trump put, such as cutting taxes or deregulation. Um, but if you look at our debt now, this is a real issue. Um, I think I just heard today or yesterday that our interest expenses are now higher than our defense budget. And to put in perspective, a year ago our debts were very high at 33 trillion, and that equates to about $255,000 per taxpayer in the US. Now we're over 36.5 trillion, and that means 323,000 of debt per taxpayer. And just to think about that increase, and our unfunded debt is up over 14% in 1 year. So this administration is not doing the kick the can down the road, and instead is sort of um, potentially practicing more austerity type measures like cutting spending, like cutting jobs. Um, so they're clearly focused on slowing things down a bit and lowering prices like gas at the pump, like eggs. Um, and our Treasury Secretary is very focused on lowering interest rates on long term down the 10 year. And if we can do that, which we've already been lowering rates on the 10 year, um, you know, if we can keep going down, this will allow us to roll our debts, and it'll also make housing more affordable. And that's been a large issue in terms of wealth dispersion in our country. So, put in context, in 2020, a family could afford the average home if their household income was 51,000. Now it's about 92,000. And that type of increase doesn't work for our country. So, while it can be concerning that we're seeing these measured steps that are slowing the economy, um, we do think that on the back end, the government intends to stimulate by reducing regulation and by lowering taxes.
So we have a lot of news that comes out every day, lots to talk about, think about. But I would ask you, what are some of the risks that we're seeing that aren't being discussed more broadly?
You know, there are so many risks that can go around. Certainly in my head and around our investors here, because we don't have all the information, and there's still a lot of uncertainty. And over the next few months, hopefully we'll get some clarity. But the things that we normally watch for as early warning signs, in terms of things like liquidity conditions, in terms of the credit environment, in terms of earnings outlook and revisions and how they're holding up, you know, um, are 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 doing okay. We're not really seeing any cracks there yet. And we remain focused on, all aspects of the portfolios. Um, and I think importantly, our long-term strategic asset allocation, right, is designed to weather volatility. We know this will happen. Um, and one thing at Comfund that we work with clients on is a crisis playbook, which creates a roadmap in times of distress and helps the organizations we work with to navigate difficult environments.
I'm really glad you mentioned the crisis playbook, because we think about these risks, and the impacts to the nonprofits that we support more broadly. We recently hosted our annual client forum and had a session specifically on this topic, Chris, the crisis playbook. Are you ready for the next crisis that might come by? So we're actually going to deviate a little bit from our regular structure and have a special podcast next month. And I'll have the privilege of having a discussion with Common Fund OCIO President and CEO Tim Yates to talk a little bit more in detail about this topic. So stay tuned for that announcement. Chris, want to be on time for our audience. So that's a wrap. Always appreciate your insights, and I look forward to our next
Thank you,
conversation.
Anita.